Hey guys, welcome back to the channel. We're looking at Bitcoin risks as the bull market retests danger levels. In the past, when Bitcoin has retested these levels, at least in this bull market, it has broken through those levels and continued to hold, consolidate, and continue on with the bull market. So we're going to look at that with Bitcoin, the stock market, and the US dollar. So there are several risky bull market retest levels that we're looking out for. So basically an update as we've had a bit of a quiet weekend. If you want more of that content, make sure you hit the like button, subscribe to the channel. This is your home in macro cycle analysis. We have the free crypto and economic report coming out tomorrow. So make sure you are subscribed to the email list and you'll get that crypto, Bitcoin, real estate cycle, economic report to your inbox. Okay, let's start off with BTC. Here is the weekly chart. The week has closed slightly higher, 2.3%. Now I'm going to throw on a ton of lines here for you to grasp your vision over. Now the first level, the major one that I look out for is the 50% level. Now I know there's quite a few lines on there, but bear with me. This is the one we're looking at here. Okay, so the first things first, 50% level at roughly $93,000. Obviously the price is at 83, there's about 10K to go. That's about an 11-12% increase to get to that level. So that's basically the major level. Now it's not the first level that I'll get to. The first level I'm looking out for are the diagonal downtrends. But I brought up the 50% first because that is the most important level. You've seen how Bitcoin reacts to the 50% levels on the way up, on the way down. It respects them in a bull market. It rejects them in a bear market. And at the moment, the longer term time frame here, so this one right here that I'm throwing around the screen, that is the level from the August low to the current all-time high in January. And you can see for these last 3 weeks, pretty severe emotional riding weeks. The price dumped to that level, $79,000, bounced really hard. That was when Trump talked about a Bitcoin strategic reserve, and then everyone figured out, well, he's talking shit and he's just going to hold Bitcoin and not necessarily buy more Bitcoin. I mean, he wasn't talking shit. He said a Bitcoin strategic reserve, and I guess something like that is coming. They're just going to hold what they have. Okay, so when the market figured out that it wasn't going to be more buying, at least in that short term after the announcement, and we had another Trump sell the news event, so another failed news event, something that should have been bullish, it failed, therefore it's a pretty significant bearish event. Well, the market turned down and it dumped, sold off nearly 15% in that week. Again, for that week, it held up just above the 79K, and then the week that we've just had hit that level, bounced above it, went just a little bit under it. So this is kind of the, I guess the wicks down, if you want to use your colored crayon candles over here. Wick down, closed above. So that's the first thing. They're the 50% levels, very important. It worked very, very well back. Well, it's been working for a very long time, but one of the most recent examples as well was the correction here in 2024. That was one of the major 50% levels on the way up. So here is the level, just as a reminder. And the major range we were using was the breakout range. Similar to what's going on right now. We've got this August to January breakout range, and there's the 50%. And then we had the September, October, which was the breakout, but the low was September. Peak was March. And then it came all the way back down, touched it, bounced away. Okay, so the 50% is still being respected. Therefore, on to the upside, should this level hold, you want to see the price get back above the 50%, and that number at the moment is $93,000. Now, what happens if we get the retest and the failure? Well, similar to what happened in other 50% tests, you can see this week here. Let's zoom in a little bit more. I'm going to put the bars back on, low, and this is the 50%, so that's the reference range that we're using. It tested it, one close above, quickly came back underneath. So the difficulty now moving forward, if you're here watching the videos, of course, you're still either in the market or you're looking to re-enter the market. Maybe, you know, you're a mixture of both. You're in, but you've got some on the side, you're looking for another opportunity. If we get something like that where there's a test and it looks like it's failing, this is probably the hardest place to rebuy. The reason being is it's going to be pretty fearful because it's coming back down. It's going to look exactly the same as everything else, or at least that's what they're going to tell us. The market, the fear, the sentiment is going to say things are going to be coming right back down, and it's going to go through and this is it. It's all over. Maybe it happens. No one knows, right? But it is the lowest risk because you're as close as you can possibly get to the reference range low. Therefore, if you are buying, well, you could potentially have some sort of stop in play to say, if this goes further, it might mean that we might see further downside. It's always an if-then scenario, but you got to weigh up the probabilities. And at least if it's close enough to the lows, well, then there's the least amount lost. Where people lose the most is buying when the market's already up. And they look back at this whole period thinking, well, it's already been up a fair bit. It has to keep going. And that's what you hear at the tops, right? All the time. November, December, January, it's got to keep going. You're an idiot if it doesn't. Trump's doing this, Trump's doing that, strategic reserve this, ETF that, Michael Saylor, billions of dollars this. It's always something, right, at the peaks until, well, they realize everyone was getting super excited at that point. So the point of the story is these lows, if they happen to be high lows, are very, very difficult. And this next point, should Bitcoin continue to rally here, get to around that 90K level or that 93K level, and fails, it's going to look like this could be over again. But of course, it just needs more time. And we've talked about time with the fear and greed index. I'll get to that in just a sec. But I want to have a look at a few more of these retesting the bull market areas, right? Basically, bull market support and resistance, short-term, medium-term, long-term. We've got to get over the short terms to get to the longer terms. So 93 is the first level I was looking at. That's a big reason for the 50%. Now it's the diagonals, diagonal downtrend lines. I'm connecting it to significant swing tops, not trying to just make up a line. I know I see a lot of people just sort of draw particular lines, get them near enough is close enough sort of thing. But no, I want something that I can objectively look at more often than not, of course, something objective. And then that means you can also use it in your own analysis. So I'm looking at these two particular highs. You got the February top, and then the market basically sold off over the last 3.5 weeks. So that is the diagonal downtrend. Again, this week could be the week that we come up, test around 90, which is also that swing bottom low. So there's a lot of pressure coming up over the next 1 to 2 weeks. This little retest, should it get that far. 90K also lines up with the diagonal downtrend, the swing low and the diagonal downtrend, 90K. If you get a wick above it within the week, 93 is the next level. And that's basically where I think the retest should come. It's also underneath the previous close and open of the last few weeks. A strong move, what the bulls would want to see is a close above both of those levels. There's also a fourth one in there. Sorry, I just saw this particular line here are the two highs from the 2021 tops. Those are connected together, and you can see that the price action has actually respected that level through it was consolidation, but it was distribution in the end. So this period at the top, it respected it once, twice, well, I can count this one here as well, 3 times, 4 times, 5 times, and then this broke, closed above it, and now we're firmly underneath that level. So there's a lot going on right in this zone, $90,000 to $93,000. Swing bottom low is 1. The diagonal downtrend is 2. The diagonal connected to the previous old all-time high, so the other support and resistance level, 3, and the 50% level, 4. A lot to overcome for BTC on any sort of retest if it can actually get there, if it doesn't fail out at around 88, 89. Okay, the good news. Shall we talk about the good news? Hit the like button. Obviously, the algorithm always loves that. But the good news is if it can break over those levels, like it's done in the past, then we could potentially see a retest of that level, even if the price comes back down and consolidates and then works its way higher. That is just going to mean more time. More time, I think, is absolutely okay, provided that sort of pattern plays out. And I'll show you why when it comes to the sentiment in a moment. We've had a few more days up our sleeve to grasp the sentiment reading and just see how it's playing out over March and April. And as I said, I also want to look at the S&P 500 and the US dollar, because some of those levels may also need to be retested through this period of what we're coming into now, this quarter 2 of 2025. We said all along quarter 1 was probably sounded very nasally, probably not going to be as easy as what 2023 and 2024 were. I mean, you can go back and check the videos. That's basically what the analysis has been saying, because of how simple that ride up has been. And so here we are, quarter 1 is a little bit more difficult here. I don't think that's going to end yet, but nonetheless, let's talk about this diagonal downtrend, this one right here. And so we're connecting those to the previous top. So this is another level that I'm watching out for the bull market retest. This time, however, it's quite steep because of the move to the downside here, and we haven't had any retests of this line or any breakouts of it. When that happens, then, or if it happens, then I would look to readjust the downtrend to see if it can continue to hold and break back above a level like that, right? But for now, this is the exact diagonal downtrend. So what happened last time? Well, you can see the consolidation here. It got rejected in May and June, and then found a new low in July. Got rejected again late July, found the final low there in August, came back up, got rejected again. September 23rd. There is your seasonal date as well. That's on the week, through that week of September when the seasons were changing. That's why we call it a seasonal date. And then we got a low into October that held the line here. It held above the 50% level. Let's have a look back here. That's the 50% of August to March. And you could see the strength beginning to form here, slightly higher highs, slightly higher lows. There was extreme fear at each of these lows. Let's have a look. There you go. On the daily chart, there was quite a lot of fear at that time. Let's have a look. Yep, you sort of drop back into extreme fear. That's going to be important moving forward as we look at the sentiment for this period in the market. But nonetheless, to finish up on these diagonal downtrends, we just take it onto the weekly chart to remove some of the noise. You can see once the market broke through that level, slight retest. I mean, it didn't come back dead to that line there. It was probably around 65 at the time, 64,800, and the low of that week, which in fact was the US election week, was 66,800, so a couple of K above that level. But again, it was an extreme event. It only happens once every 4 years. If we didn't have that extreme event, maybe it would have drifted back down and touched somewhere around that level. Either way, we're sort of talking here about a couple of percent. I put it there down to about 64.8. Yeah, 3%. So that's your retest, and then the market bounced from that. So that's the good news. I got there in the end. We got to the good news. Even if you get the breakout, watch for some sort of retest on those support levels, and then a nice explosive move. Have we seen that before? Yes, we've seen it many, many times before, even in the bear market in the bull market, breaking out of the bear market. But let's take it one step at a time. Here is a shorter term view of that. July into October, and I say shorter term because a few months to me is shorter term, but a few months for most people is not short term whatsoever. They're looking days, maybe weeks out. They're not looking 3 months out. But anyway, here is the same thing happening again. High to high, diagonal downtrend, got rejected at this level, got rejected on that August move, big dump into August. Think about those dates. They happen time and time again. September, another low here, and then the high lows begin to form. The breakout happened in September, and then the retest in October, and then a nice big move out from that retest. I really love those retests of those diagonal downtrends. We saw it again in the bear market, top to top. So this is on a much, much bigger time frame, almost a year. And it broke out, retested with the FTX collapse and high lows. The market moved away from that. And not only did it work on the linear scale, we even got it on the logarithmic scale. The same highs. Note that I didn't change this line. It's the same highs, just projected out using the logarithmic scale. The market ran up to that line, broke out, tested it, put another fresh high, and this time it tested it on the banking crisis. So massive worldwide events caused the market to correct at that time, but the TA worked again. It corrected back to those lines and then bounced out of those levels. So To me, the TA works when you see the market respecting the lines. It doesn't mean that the market has to only go up or has to only go down. If it's respecting those levels, then it gives you something to work with. If it breaks, and how it works, how you work with it is a test and a bounce. We're going long. It's strong. Go long and strong. Anyway, I'll move on from my little rhymes here. I'll go and do rhyme time with my daughter later. If it breaks down, then it's game over, right? So as long as you're finding reference tools, reference ranges, indicator signals that the market respects, either up or down, then you're able to make better informed decisions. I see a lot of the time people sort of just throwing up lines anywhere and going, oh, look at that. That's the market's hitting its head on this resistance line here. Sure, but what is the relevance of that line? Is it just this small period in time? Does it actually have any other meaning to it? That's the difficulty when it comes to TA. People sort of just throw a lot of different lines on it. If it works for them, great. If you found something that works for you, great. Otherwise, try to use something that you can then replicate time and time again. It's the same thing with anything in life. If you can't use those same principles, then what the hell is the point of it? It's like, I love the gym, I love training. You have principles that work time and time again. You just don't make shit up for every different exercise. Okay, so they are the 4 levels that we looked at with the risk at the moment. Should it happen this week? Should it happen next week? At least we're watching those levels now between sort of $90,000 and $93,000. The ultimate bull scenario is a break above those levels and a close and holding above that for at least, we like to look for 3 closes above there. Now, if it does fail, it comes back on top of the diagonal, I think that's okay. This is just going to get much more confusing for the majority of the market. It's going to be difficult, right? It's a difficult period because you still don't have an answer. You don't have a final answer. You're starting to get a few clues that it could be stronger, but you don't have a final answer. And that's what makes life difficult. Just like back here, we had some clues. We were pretty confident because of the holding above 50%, the higher lows that were forming, and we had a massive overbalance in time and price. By massive, I mean it was a strong signal. It wasn't by much, but it was a very strong signal, and that allowed us to get positioned much, much better through September and October when it was still a bit questionable for a lot. People sort of waiting for the big breakout of 74. Okay, so that's the big bull case. The bear case here, if it fails at these levels and continues down, the ultimate worst case scenario, in my opinion, is of course a close under 50%. That would be around $62,000 because that's the entire bull market range thus far. So let's get rid of a few of these lines to make it a bit easier for ourselves and have a look back to the low. So there it is, 62,400. If this thing happened to collapse, close under that, pretty much game over at that point. Now the worst case, but the bull market can remain okay, healthy, I would say, is a test all the way back to the election lows around $69,000. So that's the low point here of the election day, 69, and that swing bottoms at about $66,000, $67,000. So call it around mid to high 60,000s, but I don't want to see it close in this level for more than 2 days at a time. Even that would be a little bit too long. The reason being is we're always looking for that 3-day, I don't want to call it 3-day rule because that's a different rule. We looked at those at the tops and it worked very, very well. But 3 days in a trend is a pretty strong sign of a change in trend. That's what Gann has also looked at a lot of. So wicks down here, okay. Let's make sure that they quickly get back above the previous tops of 72, 73, 74. That top there's obviously 73,800. These other tops here are about 72. So for reference sake, between 72 and 74, closes above that level is going to be the key here. And that is the support and resistance levels of the retest. So we had the extreme bull case, the cautious bull case, break above, drift back down over the coming weeks, hold above this level. And then the worst cases would be a retest and a failure, quick failure down to these levels, big closes under 70-odd thousand. We've talked about plenty of those numbers, but wicks and closes back above the previous highs of 74, different stories. That's okay. But then again, we still need to see it get back above the diagonal downtrends relatively quickly. While I'm on the case here, the market sentiment, before I want to have a look at the S&P and the US dollar, because we're seeing where these trends might go for Q2 of 2025. The market sentiment, current time frame here from the high to the current day is about 115 days. So we're getting very close to that 4-month period. That's what we looked at with previous cycles here. Tops to lows or significant highs to lows in the market sentiment. Generally, I mean, it's taken 4 to 5 months almost through Bitcoin's entire history to wash out the extreme greed, the extreme emotions in the market. 4 to 5 months, time and time again. Sometimes it's stretched out to, well, I mean, there was still a lot of extreme greed in it there. So I'm going to stay with this 4 to 5 months because you see it quite often, these highs into the extreme lows where you get that extreme fear from the people and then they forget about it. You start to see the market climb out and away you go. So with that date and time frame in mind, we're nearly at the 4-month mark. That would take us to the end of this week, maybe early next week. If it continues on with the same sort of patterns as each other time, that'll take us out to about 150 days. That's 5 months from that peak going back to November. So 5 months takes us to about mid-April. And this is a good point to get over to the stock market. The stock market has also had some pretty interesting and important lows around April. Now, I'll go through it. We'll keep following up on the channel throughout this whole quarter. So make sure you're subscribed and like the content so YouTube knows you want to see more of it. But in these periods, when there are some pretty big headwinds on the way, and you've seen this already, we've got a nice big correction here on the S&P 500. It has overbalanced in time and price now to this low. It hasn't broken the swing low back here in September or the August low. So we've got an overbalance in price of the August period. It just needs to be tracked a little bit more because it's not, it hasn't done it to an extreme degree. You can see that it's just a few points lower. What's that, about 60 odd points? So technically, yes, it is an overbalance in price, and in time, it's only an extra 2 days. So I normally like to see a little bit more than that, but nonetheless, technically speaking, it has overbalanced in time and price. You've had the 3 days down. I saw a comment from someone saying, when are you going to talk about the three days down and the 3 weeks down? I'm like, what do you mean? Apart from every other video that I talk about 3 weeks down and 3 days down, we got 3 weeks down on the S&P 500 as well. That essentially just means that it's most likely we're going to see some sort of continued, at least one more time to the downside. There'll be a rally and then we'll see a move to the downside. Happen back here. Look at August. 3 weeks down, 3 days down as well. There was a nice strong rally, but you also had a correction again. So that corrected into September. I was making a point about August and the beginning part of the year. April. We saw April happen in 2024. There was a low. Higher low came early May. Another higher low came late May. And then it ran up into that peak of July. So what I'm talking about here is timing. So the sort of cyclical nature of the market. We've got this low around March. We know March generally has a lot of lows. I've talked about it on the channel for years, going back to 2020 when this low happened of COVID low, which is a nice 5-year repeat. So let's start back here. And you could go back each of the years and just have a look at where these swing bottoms happen. Look at March 2019. Doesn't look like much, but coming out of a very strong low in December, which is also a seasonal time, you get another low here in March and rallies up. May, another low here in June. And again, August, September, October. Here's that early October, higher low here in mid-October. Let's get on to 2020. So seasonally speaking, here is a March low. This is a 5-year anniversary is coming up this week, so the 23rd, 6 days from now. You've got a higher low here in early April, but I'm interested in this here. Mid-May also had a low. Remember, this is coming out of a very strong move to the upside out of one of the most fearful events of our lifetimes in the markets, and you're still seeing the market correct at these similar timeframes. June, late June, peak there in September. That ran down into late September, which we saw happen in 2022 as well. Higher low here in late October, and then we could keep going through 2021. January, early March, higher low here, another higher low into May, So we're looking at the sort of April, May period. And then later in the year, there's October again, higher low into October. The reason I show you October is it happened at the low, right here in the US inflation crisis, right there, early to mid-October, the final low of the bear market. And then again, you got the high lows coming out, December, March, US debt crisis. Looking on the chart here, it doesn't seem like much. I get it. And at the time, I talked a lot about this. I was going on X and saying there was a lot of podcasts and things like that on X. What are they? The live things, whatever they're called. People were doing it a lot more then, and everyone was expecting a major recession through this period. April, May, they were very emotionally driven periods, and it looks like nothing on the chart now. US debt ceiling crisis, April, May, higher low, May, and then it ran up into July, correction, so on and so forth. Okay, so that leads us roughly to around the present time. April last year had this Middle East conflict crisis low, higher low in late May, peak July down into August, September. When I first started learning about this, so quick disclaimer to anyone that's a bit skeptical, that's fair enough. To me, it was like, you're saying every month or every date or every week. And it really, it took me a little bit to wrap my head around how these things continue to work time and time again when it came to these cycles. And it's a bit of practice, but it's also just being aware of what's happened in the past and not being too shocked if you see it happen again. We saw it happen with the Aprils. We saw it happen with lots of Octobers. Look at this, October. And the 2022 low was October. I've already shown you before, March. I'm just going to keep repeating the same months, but I totally get it. If people are skeptical, that's cool. For me and my analysis, it's worked very, very well. If you want to learn more about that, check out TIA Premium. Our members have been using it very well for their own trading and investing. And when you start to stick with it over a period of time, you can really see how it gives you an edge into the market, especially when you see extreme events like this. So to finish up with the S&P 500, we've got this March low. Should we see some sort of rally, this bull market test, this failed rally, I would see something around a 50% level, provided this low stays in. So here's our reference range now, somewhere in that 5,800 point. Could be any rally up to there could be absolutely okay. You've still got support and resistance level back here at 57, and the previous swing lows here at about 58 as well. So there's a bit of work for the S&P 500 to do in order to get back into a position of strength. Therefore, these rallies may be tested. Well, these rallies could be some big tests here, and the failures to come should we see that next move to the downside. Like we saw back in 2024, we did have the 3 bars on the daily and on the weekly down, yet there was a nice strong rally, higher low formed, and then the rest is history. This time, however, I'm at the moment, and I'm willing to change my mind here because I have to, it's part of trading and investing, I'm thinking we might see a failed attempt and another move back down. I'm not sure yet whether we get a test of just the low or if it goes a little bit further to test the next lows. But I think this move here would probably fail. That's the camp that I'm in at the moment. I'll change my mind. It'll be invalidated if I see a break above this low here and the 50% level, provided this low stays in. So call it a close or weekly closes above that 5,840-ish points. That's going to put it back into a much stronger position, and any move to the downside far less likely to break that particular low, which would mean how you can act on it is it's a much better chance buy the dip opportunity. That's all I'm going to say on that. And I'm talking here at S&P, and then you have to check out how Bitcoin looks at that time as well. Should we get that move up and then that higher low form? You know, it could be somewhere here and starts to drift off down there into your April dates. Another move, another higher low, similar sort of pattern here. Let's do that here so you can see. Where's this? Here it is. Low. And let's just take it up to the breakout. What if you got something like that? That's, you know, that wouldn't be too bad. That'll grind a lot of people out. It'll get close to some of these dates, lining them up with this. That'll be, you know, 140 odd days. You'd start to see the sentiment creep up, maybe hit it again, and then start to work its way higher through that next period. You know, should it continue to climb and break past those 50% levels. Now, the last one I wanted to look at was the US dollar. Generally, over a longer stretch of time, it's not sort of day to day, in my view, obviously my opinion here with the analysis, is that once we start to see this major breakdown for the US dollar, asset prices are likely going to have a pretty reasonable time. I'm talking primarily about about Bitcoin's price. Now, this is the second largest weekly crash in 5 years for the US dollar. The only other time it happened was November 2022, which was the week of that crash for Bitcoin into the low. And then that's where the bull market started for BTC around that mid-November period. The US dollar crasher, that was 4% down on the week. Now, the other time it had a major move there, 4.7%, was March 23. So literally next week will be the 5-year anniversary of that 5% crash after the COVID pump and dump. And then, well, you can see what happened there to the US dollar. It basically crashed 104 down to about 89. Okay, so now we've seen that happen. We've got a 3.4% correction. So you guys can correct me if I'm wrong, but from what I could see here, this is the third biggest week in 5 years. And the other 2 times, yeah, only 2 data points, the other 2 times this happened, we saw significant corrections for the US dollar. On top of that, our analysis here, there's an overbalance in price, there's an overbalance in time. It's broken the swing lows here, and it's broken the 50% levels. In this case, it's broken 2 of them and multiple swing lows. So more and more is stacking up to suggest that this top is in for the US dollar and that this decline is going to extend further, which I think is going to make it a hell of a lot easier for the Bitcoin price to go up when it comes time. And I looked at that in terms of the sentiment, and then also this timing here for Q2. Like, subscribe. We've got the free report coming out tomorrow. More updates coming your way with BTC and the stock markets, of course, US dollar, commodities. And I'll see you guys back here really, really soon. Thanks again. Take care and peace out.